Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're tackling a pressing issue, the rise in mortgage delinquencies in Ontario and the Greater Toronto Area. Recent data from Equifax Canada, prepared for the Canada Mortgage and Housing Corporation, shows an increase in mortgage delinquencies to 0.22% in Ontario for the first quarter of this year. That's up from 0.15% in the first quarter of 2024 and 0.09% in the first quarter of 2023. Toronto's numbers are slightly higher at 0.23%.
It's definitely a concerning trend, Steve. When you hear that more than 11,000 mortgages in Ontario recorded a missed payment in the last quarter of 2024, it's hard not to feel empathetic for those struggling homeowners. People are facing tougher times with rising interest rates and economic uncertainties.
Absolutely, Janine. But it's important to look at the factors behind these numbers. Experts attribute the rise to two main reasons. Many homeowners are renewing their mortgages at much higher rates than what they initially signed up for during the pandemic, and there's a notable economic uncertainty that's impacting the labor market.
That's true, Steve. During the pandemic, people had low borrowing costs and some forced savings. Now those savings are dwindling and the reality of higher payments is setting in. It's predictable that some might struggle with this transition back to normalcy.
Yes, and as Jordan Nanowski, CMHC's lead economist for the Greater Toronto Area, points out, this wave of mortgage renewals is reflecting higher costs. Plus, economic uncertainty is finding its way into the labor market, with job cuts in certain industries adding to the pressure.
And we can't forget the impact of the softening condo market, Steve. If people are looking to sell their properties and can't find buyers due to the weaker market, they might end up in arrears for longer. It's a tough situation for those tied to their properties.
Indeed, Janine. Ontario is also particularly vulnerable due to the ongoing trade tensions with the United States, especially with industries targeted by tariffs. This could potentially lead to more job losses and, in turn, higher mortgage arrears in areas like Windsor, Kitchener, and Hamilton.
That's right, Steve. While the Greater Toronto Area has a diversified labor market that offers some protection, there are still vulnerable spots like Oshawa where jobs are tied to the auto industry. It's a delicate balance, and I hope we can find ways to support those affected.
For now, though, it's important to note that mortgage delinquencies are still below 0.25%. As Maria Solovieva from TD Bank mentions, while there's strain, it's not yet a breaking point. But we should keep a close eye on these developments. The Canada Mortgage and Housing Corporation has released its summer update for 2025, forecasting a price drop in housing across the country by 2%. Ontario, along with British Columbia, is expected to experience even larger declines. But Windsor-Essex is proving to be somewhat of an exception in this trend.
That's right, Steve. While the broader market faces challenges, Windsor-Essex is showing resilience, particularly in the competitive sub-$600,000 price bracket. Juliana Biondo, president of the Windsor-Essex County Association of Realtors, highlights that Windsor's market is unique and niche, which may be contributing to its stability.
It's interesting to note, Janine, that despite the economic pressures from the ongoing Canada-US trade tariffs, Windsor-Essex is managing to hold its ground. The tariffs are expected to peak later this year, leading to a mild recession. Yet, the real estate market in Windsor seems to be weathering this storm better than other regions.
Absolutely, Steve. Even with a high unemployment rate, which Statistics Canada reported at 11.2% for Windsor, the market remains steady. Buyers are becoming more selective, ensuring that their conditions are met before making purchases. This cautious behavior is contributing to a more stable environment in the housing market.
And it seems that the market dynamics are shifting in Windsor-Essex. with an increase in average sale prices of nearly 3%, despite a decline in home sales and a rise in new listings. This suggests that while buyers are choosier, they're still willing to invest in properties that meet their criteria.
That's a great point, Steve. Juliana Biondo also mentioned that Windsor-Essex is still very much a seller's market, particularly in the under $600,000 category. This suggests that despite the broader market slowdown, there is still strong demand in this price range.
Looking ahead, the CMHC forecast anticipates a recovery in 2026. However, challenges like rising construction costs and lower investor confidence are expected to persist, especially in Ontario and British Columbia. These factors are leading to delays and cancellations in new construction projects.
Yes, and while those challenges are significant, Windsor-Essex's ability to maintain a competitive market amidst these issues is noteworthy. The community seems to be holding on to hope that the trade disputes will eventually resolve, allowing for a more stable economic environment in the future.
In our final segment today, we're turning our attention to a significant regulatory development in Ontario's mortgage industry. The Financial Services Regulatory Authority, or FSRA, has taken decisive action by revoking the mortgage brokerage license of Expert Financial Corporation. This move also comes with administrative penalties for Expert Financial and its principal figures, Upanshuman Pandey and Verinder Singh Virk.
Yes, Steve. FSRA's decision reflects the seriousness of the violations. Expert Financial, along with Pandey and Virk, have been penalized for facilitating unlicensed mortgage business. This is a clear reminder of the importance of maintaining professional standards and ensuring that all parties involved in the mortgage process are properly licensed.
According to FSRA, the penalties amount to $36,000 for Expert Financial, $32,000 for Pandey, and $2,000 for Virk. The infractions included allowing an individual, Nasir Syed Zaidi Hussain, to operate as a mortgage agent without a license. This involved meeting clients and collecting documents, which were then processed by Pandey, who submitted mortgage applications and shared fees.
It's a troubling situation, Steve. Consumers trust that their mortgage agents and brokers are operating within legal boundaries. When that trust is broken, it can have widespread implications. Alyssa Sinha, Director of Litigation and Enforcement at FSRA, emphasized that licensees must not facilitate activities for unlicensed individuals, underscoring the need for accountability in the industry.
Absolutely, Janine. FSRA's enforcement actions underline their commitment to ensuring that consumers are advised by licensed professionals who meet legal and professional standards. This case highlights the responsibilities that come with being a licensed professional in the financial services sector.
And it's also a reminder of the importance of transparency and record keeping. Pandey and Expert Financial failed to verify borrower identities adequately and did not maintain proper records, violating several regulatory sections. These oversights can lead to significant penalties and reputational damage.
Indeed, Janine. While this situation serves as a cautionary tale for others in the industry, it's also worth noting that FSRA has settled with the parties involved, which might indicate a willingness to resolve these issues amicably. Nonetheless, the message is clear. Adherence to the law is non-negotiable.
Absolutely, Steve. It's vital for the integrity of the industry that such standards are upheld. As we wrap up this episode, it's crucial for listeners to understand the importance of working with licensed professionals to ensure a safe and legal mortgage process.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.